Hey guys, hey, what's up? What's up? How you guys doing? Okay, the first space, the network was actually a little bit bad, so I hope you guys can now hear me. Um, yeah, so let's get started. The space has just started now. I'm gonna be waiting for some people to join in, but as you joining in, please, I just request you that you share the conversation. Just go down to the right hand corner down. There is an icon for sharing this space on your timeline. You can share so you can have many more people come in and join. Yeah, so the week was a bit, very hectic for those of you that have been in the market, and for those that actually, had some hits or got some wins here and there. That's the market, and that's how things run. That's how things roll. So it's very, very important to always make sure that you review where you're at and how you're performing, what you're doing. I think that becomes very, very key. Benchmarking how your performance is one of the things that everybody needs to be doing. It's a discipline that you teach yourself. It's a discipline that it doesn't come easily, but you just have to do it. You just have to do it. You have to change yourself for the game. And of course, if you want to play the game the right way. So it's very important to take note of the things that are going on, your trading experience, how your week has been, how your day has been. It's very, very important that you note down and make sure you take those notes, because that's the only fact that you have about your own data. And like we said before, if you are actually starting out to do forex trading, or you actually out there, you're still reading, and you want to be part of the community that does this business, the one thing you need to know is carrying a personal journal with you is very, very key. And that is level number one for you to be able to track how you perform, and also to be able to track maybe some things that are not going right that you need to put right. So yeah, so as we wait for people maybe to join in, I hope the network is good. I hope the network is good, guys. The network has been a very big problem these days. I don't know if it's all about the Twitter app or it's the telecoms that we use, especially in this space where the network has always been, disturbing. But if you guys can hear me well, just give me an emoji. SM, how are you? How are you doing? Kotele, Ha Queen, how are you doing? Shalom, what's up? What's up? How are you doing? Fantastic. So I know you guys can hear me well. Yeah. So today we're going to be talking about a very, very, very important conversation. Now, the conversation we're going to be having is decision-making process for beginners. So sometimes people actually don't know that the biggest percentage of the work put in for anyone to start trading and executing on a good level is the work that you do so that you can make a good decision. Now, that's the real, that's the real deal. It's the deal breaker. The decision you make can make you or break you. And you don't want to be getting into some space you doubt, you're not confident, you're not sure, you just can't put any kind of confidence to the decisions you're making. Then you'll be headed for a very, very difficult time. So this is why we're gonna be discussing this. But as we get started, there's some things that quite a lot of people sometimes ignore. Things like your personality, things like your characters, things like your environment, things like, the people that surround you every single day when you're doing this. All those things do matter. So quite a number of people try to discard some of these factors, from, they want to show that these things can't affect me. I can go out there, do my trades, be profitable, irrespective of whether I mind how I take my decisions or I don't mind, or irrespective of whether my decisions are informed or not informed. Yeah, so quite a number of people make that mistake, and let me tell you honestly speaking, for people that are self-taught, like I still always bring it back to being self-taught. Now, there's so many challenges that come with being self-taught. Sometimes you've got a cloud of, confidence that is not backed up by some bit of accuracy and evidence that you can use to make proper decisions. But because you're self-taught, you feel like, hey, I'm doing the right thing. And it is very okay. It is very normal, because at the end of the day, those decisions that you make, whether right or wrong, they're the decisions that are going to decide who you turn out to be. So throughout this journey, there is something that I really want us to pay attention to. And and that's and it's very hard to say you're going to change yourself after, when I become a better trader, I'll change the way I behave, I'll change the way I look at content, I'll change the way I look at things. Things don't work like that. Things don't work like that. You must have a discipline to start straight away. As soon as you get to know the right thing, you should be able to do it. And that's how it works. So if you ain't ready to actually go the way it works, then it's going to be very, very difficult for you, because you want to create this perception that when things get better, you will start doing the right thing. But doing the right thing is something you need to actually commit to, and it's something that you need to get focused on. So that's what we're going to be discussing today. Of course, as people join in, I just want you guys to be ready for that conversation. I mean, at the end of the day, sometimes you can do all the reading as an individual, you can do all the things as an individual. If you don't have a community where you get to validate, okay, and the word is validate, where you get to validate what you know, if it works, if it's worked for some people, if it's what other people are doing, then you are in a space that most probably will not create enough confidence for you to be able to take some decisions. Yeah. So as beginners, we really, really, really need that backup to create our confidence, because at the end of the day, every decision that we make regarding what we're doing is is actually a factor that builds our confidence. And the moment your confidence is shaken, the moment your confidence is not stable, is not strong, then it's gonna be hard for you to take the decision. So I'll tell you, like, the first thing is, a lot of people want to be in these spaces of, forex trading and all that kind of stuff, but they're not willing to sacrifice the time to read, they're not willing to sacrifice and research, they're not willing to go look out for people that can help them in this industry. So I'll be honest with you, if you're one person that is used to watching 2 minute videos on YouTube, you used to watching short videos on TikTok, on Snapchat, and you think that's where you're gonna learn to do the right things, then you may need to ask yourself again if you're doing the right thing. It must be an intention for you to go out and learn, guys. The first thing you need to know, if you're gonna make the right decisions, go get an education. And I don't mean like go to university or go do anything. Just make sure that you go do the right thing in what you're trying to do. What does educating yourself bring to you? It brings you a hail of baskets and baskets of confidence. One of the biggest challenges that you will ever face, the biggest perhaps as a beginner, is lack of confidence to take a decision. That is a very, very huge challenge. And you should not hold yourself accountable for having faced that, or you may be still facing it, but you should hold yourself accountable for not trying as much as possible to learn the things that will boost your confidence. That's level number one. Um, it's not about capital. Like, let me tell you, um, honestly, after some time doing some courses from different people and reading all this content that is put out there and stuff like that, I have gotten to learn. I have gotten to learn that the biggest challenge for traders, especially beginners, is not actually lack of capital. It's lack of confidence to believe in what they're doing. Lack of confidence to believe in what they're doing. And because of that, it's actually guys, just give me a second. Just give me a second. One of my babies is crying here, so let me just find out. Just a minute. Just give me a second here. Okay, we're good. We're good. We're good now. Sorry about that. Um, yeah. So I hope you guys can hear me well. Kindly just make a comment to me if you can't hear me. But I intend to make sure that everybody can get maybe what we're discussing. Oh, fantastic, fantastic. Okay, yeah. So I wanted us to have this candid conversation. A lot of times people are going to charge money for people to learn how to do things, for people to learn how, to make decisions, right decisions as beginners, to build confidence, the psychology, and all that kind of stuff. But something that many people forget is everybody, when they start to do the Forex trading courses, they're worried about where they're going to get the capital from. And I want to assure you guys, like, getting capital is not actually the biggest challenge. The biggest challenge is decision making process. That is the real big challenge. So in this whole conversation, I have just told you that if you're not ready to invest your time and resources to educate yourself, you're probably gonna be playing no, I won't say a losing game, but you're probably gonna be playing a game full of luck, a game full of chance, and a game full of gambling at some point. And that does not take you long. Like, it does not give you the long term benefits of you participating in the trading market. Take, for example, if you really, because I know quite a number of people are already so interested. No, don't mention the things, psychology, decision making. Like, what are you talking about? Analysis? Like, bro, don't waste our time. Just take us straight to the thing. We want to see markets. We want to trade. We want to start positioning trades. That's what I want to hear. And people rush. People rush. But this is what happens after people have lost some bit of money, and every time they lose money as beginners, the confidence that they had also gets distorted. Now, at that point where the confidence is distorted, is the real point of suffering for beginners. Because many people begin by saying, hey, when I'm doing the real trade, I'm going to wake up. So they ignore the demo accounts, and they don't want to be, they don't want to teach themselves any of that because it's not money. All they're interested in is to put $100 and make $300 in one day. That is something you're working on to put yourself into a very disastrous environment. Before you think about making the money, you have to think about if you're ready to be in that environment to make money. And that's one of the things that I want us to be able to work on. Despite the fact that the biggest thing for traders to be successful is decision making, the biggest thing for beginners to actually grow into better traders is building the confidence and the psychology that they need that will support them in the market. And how do you build that? You actually gonna build that by first and foremost focusing on the things that matter. And I'm gonna give you an example. Focusing on the things that matter. So just take an example. You you just can't say you're gonna do forex trading if you actually haven't even acquainted yourself of what forex trading is. Like you just wake up because the graphs and the apps are all available. You want to go start immediately, and you want to start there. You want to start immediately pumping in money. I've had an opportunity to share with some people, and even me personally, I can tell you the real first time I did open up an account, I stuck to the demo. I stuck to the demo because the person that was helping me earlier on was actually emphasizing the fact that, hey, trading real money can even take you a year to do. And there's no need to rush. The market has been around for very many years. It's going to be around tomorrow. It's going to be around Monday. It's going to be around anytime you're ready. So there's no need to rush. Like the market is leaving you behind. There's no need for FOMO, the fear of missing out. You don't need that. You don't need that. And the beauty about what we're doing today, like what the conversation we're having, guys, many people struggled a lot to actually get maybe like the information that we're sharing right now, and to just have somebody to tell them to raise their confidence, because as people kept on losing money, they lacked somebody they can talk to. They lacked a community. They just did not have anyone that was there to support them. And because of that, many people ended up quitting. Now, before you actually think that the market is leaving you behind, think about the fact that all those years you're not part of the market. It's been around and people have been trading the market for more than 40, 30 years, and they are still doing that to date. That tells you that the market is not going anywhere. But what needs to be the difference is that you have got to be patient. One of the things that I really wanted to mention firsthand is patience, but I really needed to show you guys that you have got to be patient. Um, over time, over time, it's very evident that the more you practice, the more you try out certain strategies on the demo, the more you build that confidence. But in order for you to be able to get the time and get the attention that it deserves for you to run a demo account and put your strategies at test, is the real patience I'm talking about. Now, it's very easy to think that as soon as you put your money into trading, you're going to be making money. That's also a wrong assumption, a very, very wrong assumption. So as you get started, and even when you're reading, like many people I know, one of the platforms that are very good for forex trading and all that is Baby Pips. Now, even as you get started on Baby Pips, I just want you guys to have one thing in mind. You ain't joining the market to win all trades. Okay? And if anyone comes out to tell you they are winning all trades, then there is a problem. There's a very, very big problem. I understand that many people actually get hoodwinked into thinking, and usually this happens by people who actually haven't even gone deep into the market. Because trust me, the first thing you will realize that someone is serious about, learning what the market is doing and what the business is all about. They will tell you and they will encourage you to learn. But when someone tells you, hey, bring your money, I can help you invest here, make so much money within a very short time, that's a red flag. That's a very, very huge red flag. Um, where you get your information as a starter, Instagram, YouTube, Twitter, you find people showing you only the pompous side of trading and all that kind of stuff. It's a red flag. And the biggest percentage of you becoming successful on the market, and I'm talking about becoming successful because look here, you don't have to have $1 million, for you to say you're successful. If you're able to trade $50 and take $50 from 50 to $70, that's success in forex trading. But also, if somebody comes and tells you you're going to take $100 to $10,000 in 1 month, that's a red flag. And this is something that you need to know from the word go. We have just discussed that you need to have patience. You'll need to train yourself to believe in the process. And you also need to convince yourself that, hey, the market is actually not about gambling. It's not a lottery. It's not a game of chance. It's a game of learning and building the confidence in what you're doing. So for anyone out there that is at the beginning stage and you're still wondering why maybe you're making losses here and there, it's because you have decided to actually think that by you having money in your account, that's all it takes. It takes more than that. It takes more than that. It overwhelms sometimes when you have money, real money in your account, and you know nothing. Okay, sometimes the only thing you know is even how to position a trade, but you just can't even do risk management. You don't know a stop loss, you don't know a take profit. Like you just there because you were able to transfer $100 onto your account and you immediately got started. Now, when you're in that scenario, it overwhelms you. You actually get to a point where you think that maybe you're doing the wrong things. And it takes a lot of time for, for a community like us here to just come out and say, hey, we have got to build one another. We have got to create confidence. A lot of people try these things and they have no one to speak to, and that actually beats them, to get to a level where they go through a lot of stuff and they just cannot be able to overcome. You don't need to be that kind of person. You actually need to belong to a community. You need to, if you can't have conversations like what we're having right now for people to tell you what you're going to be going in for, I encourage you that you find somebody else doing the same thing and make sure that you share something. Also, just as we get to the real gist of this conversation, I want to tell you that having somebody to mentor you is a very, very key aspect. Having somebody that has been in the market for some time to give you the guidance and be there for you to support you in this process is something very, very, very important. Now, if you don't have that person, you're likely gonna have two things happen to you. You're likely gonna stress a lot by doing the wrong things over and over again, and you see no improvement, you see no results, or you're gonna give up. And honestly, telling you guys, giving up on something that you so much believed in would work for you is another huge challenge that a lot of people face. So, in the conversation we're having today, I just want you to all understand that in order for you to actually pick your steps into forex trading, the biggest the biggest job is decision making. When do you buy? When do you sell? When do you stay out of the market? When do you go to read news? When do you actually depend on technical analysis alone? When do you depend on sentiments? When do you know that the news on interest rates, inflation rates, and all that kind of stuff, when do you give it time and know it's the factors that are going to matter in your decision making? That is what you need to be working on. And there is, something that I really, really deeply want to um, also be able to share with those that are starting up in the market. It's not true that if you actually miss taking a trade, you will never get back that opportunity to take it. It is not true. The market is not running away. That's the FOMO I talked about. There's a lot of FOMO that is usually created by us beginners where you get to a point you're like, I missed out, I should have been there at the beginning of the London session, maybe that's why I should have picked my trade, or I should have been there at the beginning of the New York session, maybe that's where I should have put my trade and stuff like that. So we kind of put ourselves on tension by thinking that, hey, we have missed out a lot, so we will never catch up again. That is a very, very big myth. Secondly, you want to learn how to make your entries, you want to learn how the market is set up, and you want to learn everything about trends in the market. As a beginner, I think if you know what the market is doing, that's level number one for you to make a decision. It's very hard for you to open and just bump into the market and you want to start positioning trades, but you actually don't know what the market is doing. And what does the statement, what the market is doing, mean? Where is the market going? Where is the market going? You don't want to position yourself in a state where you go against where the market is going. And this is very, very common, especially, for people that start out and don't even know what time frames are. If you have started out and you don't know what time frames are, then it becomes very, very difficult for you to be able to win in terms of knowing where the market is going, because you typically stuck yourself, to the 1 minute time frame, or you have gotten yourself to that point where you think the 5 minutes time frame is all the market is all about. I want to tell you that as you prepare to to learn where the market is going, you should be able to use higher time frames. And the higher time frames, that's the 1 hour, 4 hours, 1 week, 1 day. Those are the time frames you need to look at. And why is it important to look at those time frames? It's because you want to actually move with the market. Okay, you don't want to move against the market. Just take, for example, if the market is bearish, it is trending downwards, and for you, because you actually using the 1 minute time frame, you think the market is bullish, and you're going to position your trades, you're going to position your trade to buy when you are supposed to be selling. Now, all those trades are going to be losing trades, and you start blaming yourself. You start saying, hey, why am I losing? Why am I doing this? But the thing is, when you're making a decision to take that trade, you actually never thought about learning the direction of the market. That is very key, guys. That is very, very, very key. You don't want to position a trade and you're going against the market. And also, this brings me to this point. As beginners, guys, make analysis. And I will assure you, you can't make analysis on your phone. This is for sure. If you want to take this game seriously and you want to take it to the next level, I encourage you. You may not be able to own a laptop maybe at the start or a computer, but I encourage you, get somewhere or borrow from someone, or someone that can help you so that you look at the market charts. And that also calls for you knowing exactly which kind of chart you're going to be using. Is it candlestick? Is it bar chart? Is it line graph? Is it like this? Is why I said it's very important, guys, to invest in yourself by learning. Okay, invest time, look out and learn, because every single step that I'm talking about is going to be hard for you to implement if you don't know what it's all about. Okay, just like I'm saying, if you want, before you actually think about positioning a trade, like whether you're scalping, whether you think the candlestick will turn and you just put your money there, I want you guys to know that before you do anything, number one on your list is to be in a good mental state. Okay, to be in a state where your mind and your environment is suitable for you to go into the market. That's number one. A lot of beginners multitask. You want to open the market, you have $100 on there, you want to position a trade using your phone, you have no time to open your laptop and look at the charts, you're going to get hit and you will burn out. You will burn out. So if you want to get to that point where your confidence levels are built as you grow up, you actually need to be able to tell where the market is going. That's very, very huge. That's very, very important. The direction of the market should actually tell you the price action. Okay, a lot of people already know that price action, knowing the price action in the market is very important, but they forget that the role of price action is typically to tell you where the market is going. And the most fundamental, time frames to tell you that are the higher time frames. That's 1 hour, 4 hours, 1 day, 1 week, 1 month. Those are the time frames that will convince you the direction of the market. Now, if you're done with that, that's level number one, you tick it off. But like I said, if you guys are noting down some of these things that you need in your decision making process. So I have talked about the right environment and right state of mind. Okay, so don't go into the market when you're angry, you want to revenge, you want to prove to the market that you're better than everybody else in the market. You are actually in a state where maybe you just had an issue with maybe your partner, your friends at home. Like you're not in the right mind to go into the market. That should be a red flag for you not to even dare yourself to go and struggle with things. Because if you're not in the right state of mind, you'll never make good decisions. Okay, so that should actually be a universal factor. So the number one we've looked at: know the trend of the market, know price action, know where the market is going. The number two, after knowing the trend, what are you gonna do? What are you gonna do? Are you gonna buy? Are you gonna sell? Are you gonna abstain from the market? Are you going to stay away? What is the market doing? Because if you know the market is bearish, you know you're going to be selling. If you know the market is bullish, you know you're going to be buying. If you know the market is actually ranging or in consolidation. Now, consolidation is when the market is not making any serious moves, into the bullish side or the bearish side, but it's just in there. It's just, between some ranges, a resistance and support, and it's playing within there. How are you going to react to that? Okay. The only way to know is when you take a decision and you know the proper direction of the market, you now inform yourself like, hey, I'm going to be buying or I'm going to be selling. But the question is, what are you going to be selling? Is it a USD? Is it a GBP? Is it like what pairs are you going to be looking at? Or what assets? Is it gold? Is it oil? Is it crypto? What are you going to be looking at? And as because now remember that you already know where the market is going, you're already in the good mind to trade, you now know that you're going to be selling. So the next decision you need is which pair are you going to be working with? Okay. Now, as soon as you decide that you're going to be doing pairs maybe that deal with the USD or GBP or crypto or gold, has a backing with the USD, fantastic. You know that now, since the market is bullish or bearish, you're going to be buying or you're going to be selling. And now you know that you're going to be dealing with maybe with a certain pair. Now, as soon as you identify that pair, I want you to do one thing. This always as beginners, we forget. Like I told you, we lack the patience to actually have the right check marks before we go and start trading. So as soon as you learn the pair that you're going to be doing, I want you to do one thing. I want you to go check what they call economic calendars. Okay, these are very many, but I want you in specific to go to investing.com. Or for those of you that use some apps, actually, there are apps that the brokers, the apps on the phones usually bring you the news for that particular period. So I want you, by all means, guys, because these are decisions you're making and that need to be informed. You don't need to gamble. Guys, you don't need to gamble around. When you're starting, it's very okay. It is very permissible for you to gamble as a beginner that has never talked to anyone, as a beginner that has never had anyone to join, to guide you on this journey and stuff like that. But as soon as you now move from that point where you are by yourself to a point where someone talks to you, to a point where you get to discuss with someone, it is not an excuse for you to make these blunders which you would have avoided. Okay? So just before you go in, and the things I'm saying, whether you are doing a demo account or you're doing a real standard account, these things do count. These things to count because this is the discipline that you want to teach yourself. It's a discipline you want to encourage yourself to do. So go ahead, look at the economic activities that are going to happen around that pair or around that bias of occurrence that you're going to be taking in the pairs. And if you discover that there will be news or there will be some activities that are likely to impact on the volatility of the trading volumes for that particular time, you need to be aware because that is now also going to impact on your decision making. Okay, so if you're going to deal with the US dollar and they'll be reading maybe the interest rates or the inflation rates or the employment rates or stuff like that in the US, then it's going to be affected by that news. Now, news fundamentally and other macroeconomic factors that affect economies is what we refer to as fundamental analysis. Okay, so after you looking at the charts and knowing that the market is going downwards, you also have to make sure that you are in the know of fundamental analysis that touches that pair that you're going to be dealing with. So when someone says, oh, I fundamentally, look at the market and stuff like that, all they're saying is I analyze the macroeconomic factors that do impact the market. And which are these? That is news, that is banks, interest rates, and all that kind of stuff, but also the politics of these economies. So those are the factors you should be able to look out for. If there is anything that is affecting the pairs that you're going to be dealing with, please take note of that. So as soon as you're aware of that, then you're now ready to go, because the next thing now you need is to look out for your proper entries. You just need to make a decision whether you're gonna make your entries on a 5 minutes chart, or you're gonna do it on a 1 minute chart. But those entries that you're about to make have actually come as a result of the decisions that you've made from level number one, where we talked about knowing the trend of the market, and from there also knowing exactly which pairs you're going to trade, then knowing the fundamental analysis that is affecting those pairs, and also just thereafter, you should be able now to have the confidence to know where you're going to be positioning your trade. So when it comes to that moment, and I'm talking about things that impact both, if you're doing on a demo or you're doing on a real account, these things do impact both ends. You don't want to do it and you just leave it because you're doing a demo, so it doesn't concern you. These decisions that you take is a routine that you want to get into yourself and be able to follow it and make the right decisions. So as soon as you position the trade, you now know that positioning a trade requires you to actually put your money. Okay. And as a beginner, you don't want to put your entire money at risk. So because you know you're going to be trading, say maybe 3 trades a day or 4 trades, you need to know how much money you're willing to lose in order to make money. At that point, it becomes a very key step for you to actually now go back and look at the size of your account. Now, looking at the size of your account is going to tell you one thing: that you're too strong for the market or you're too weak for the market. And that should immediately inform you, okay, of how you're going to be looking at the market. So here's the thing. At that level, and I want us guys to get this clearly, that just before you position your trade, it is important to pay attention to the size of your account. But what is the relevance of paying attention to the size of your account? One, you don't want to be hit out of the market where you plan to do 4 trades and you hit out after 1 trade. Okay? 2, you don't want to use 1 trade and use a lot of money on 1 trade and fail to position other trades. Number 3, you also don't want to risk too much of your account. So what does this mean? This is the point now when you start thinking about how much money you are willing to lose on any given trades. And as soon as you know how much money you're willing to lose in order to gain, then your decision-making process actually gets solidified. Because from the top where you've looked at the market and all that kind of stuff, and now you've come to a point where you're going to be positioning a trade, but now you know that my account is $100. So in order for me to make money, I am willing to lose $5 to make $10. So meaning your risk to reward ratio is 1 to 2. Okay? 1 to 2. And believe me, whether you're doing a demo or you're doing a real account, these are things you're not going to run away from. And this is why I said it is very, very, very key, guys, that we keep educating ourselves. Now, I have been talking about many things. You just cannot learn all these things in the 2 minutes videos. in the short videos on YouTube, guys. You have to take time and educate yourself to a level where you can understand what the things the market is all about. Okay, so at that point where you now you now take the decision that I'm willing to lose $1 to make $2 or to lose $5 to make 10, that risk to reward ratio is 1 to 2. Okay, now you know that you have $100 and you're going to be positioning 3 trades today, but every trade you're willing to lose $5 in order to make $10. So you know that your stop loss is going to be $5. Okay, your stop loss is going to be $5 and your take profit is going to be $10. So what is left there after knowing those two things is you look for a suitable hotspot where you want to put that trade so that you actually try to make sure that it's a winning trade. Okay, so as soon as you make that decision, based on the size of your account, based on the risk reward ratio you want to use, I want you to remember something else that I know many people usually, when they start to do trading, they forget something about leverage, lot sizes, and all that kind of thing. I want you to pay attention to the leverage you're using, and I want you also to pay attention to the lot sizes. But sometimes, as a beginner, I encourage us all to make sure that you don't actually exaggerate your lot sizes. You just use the normal, micro or nano, or, depending on the size of your account. Use that and start practicing. When you position a trade with a lot size of 0.01, you can be able to use that and build your confidence. As soon as you do a good number of trades and they are winning trades, or you lose some but you still have your confidence, then you can go on to adjust on your lot size. Wanting and having an urge to make lots of money before you master what the market is all about is a very huge red flag that is going to kick you out of the market. So, as somebody that is self-taught and now you have the opportunity to share with maybe some other people that are also doing stuff in the market, you will want to desist. You'll want to stay away as much as possible from the urge for you to want to make quick money. Okay, and at some point we're going to learn how compounding small profits is actually the real formula for stable trading and making long-term profits. But before we get there, I just wanted us to be able to follow these nitty-gritties. Like, I love the fact that everybody that goes into the market is actually having the intentions of making money. But I also want you to know, as a beginner, that the market wants to make more money from you. Okay, you're not going to be smarter than the market. Okay, you're not going to outsmart the market, because the market is the market and you just have to be part of it. Okay, you don't control it, you don't run it. Yes, it's very important, like I said, to be in the right state of mind as you get started, but do not risk real money before you actually go through the right process of decision making. I tell you this, guys, you may or might not have had an opportunity to share with other people that maybe are doing the same thing like you're doing. The biggest challenge that many people that teach themselves how to trade face is the decision making process. It becomes very, very difficult. And also sometimes because you don't have a mentor, it's like I said, guys, it's not about the capital. Stop even worrying the how much money your account should be. It's about learning what the market is all about, because once you learn, it now becomes very easy and very efficient for you to take those decisions that can even help you with your small account to start growing it. Okay, because you don't wait to start learning when you have $1,000 on your account and you think it's all about how much you have. than how much you know about the market. How much you know about the market is the real deal. It's not how much money you have in the account. And therefore, that means like if you want to train yourself on how much you know, you actually better off using a demo account before you get the urge to use real money and you're just blowing that money without bringing you value. Yeah, so that's what I had to discuss with you guys. I don't know if you guys have any questions. Please, if you have any questions, just request for the mic. Or if you want to supplement something, though, also go ahead and request for the mic. And then I'll be able, in case I'm able to answer the question, or I'll be able maybe to refer you to some resources that I know that can be able to help you. Yeah, so if you do have a question, please go ahead. But I wanna encourage you guys. You by you deciding to learn forex trading, you first of all in the first place you have made the right decision. You have made a very, very huge decision that might impact your life for the rest of it and your family and background and people that are around you. So don't ignore these things. Don't ignore these things. Keep educating yourself, keep learning, keep sharing. Okay, learning and sharing is what will build your confidence, it will build your psychology. Also, stay away, desist as much as possible the urge of spending real money on forex trading before you actually confident that you can even position trades the right way. So guys, if you have any questions, or if there ain't any questions, guys, just give me an emoji of how you feel after this almost 1 hour session. Just give me an emoji of how you feel about it. And also, in case you want to communicate something to me, you can still go ahead and DM me. But if you have a question that you want us to discuss here, the mic is open. Just request for it. I'll be able to let you have it so you can be able to make your comment or ask a question. I know it's a Saturday, lots of people having activities and here and there, but it's always very important to make sure that these catch ups do happen. And I also think it's very, very key to always use the opportunity available to keep learning, to keep sharing, to keep gaining experience and gaining knowledge as far as this industry is concerned. So, with that, guys, I wanna just know if you guys have questions. Please go ahead, request for the mic. Don't fear to speak, and don't fear to say something that you really feel maybe we should be discussing or we should be able to talk about. Please go ahead and talk about it. Let's see if there are any. I'm gonna check my DM here and see if there are any questions that are coming through. Um, okay. Okay. Okay, cool. So the DMs that I have, okay, there's a request here. There's a request from someone, so I wanna add them as a speaker. Mulia, I just added you as a speaker. I hope you can be able to um, accept that and you speak to us. Oh, okay. Looks like you actually dropped off. I don't know if it's the network or something, but I've sent you a mic, so please accept the mic and speak to us. Yeah, guys. So if I hope you guys are having a fantastic weekend, though, and if you're ready to say something, please just go ahead. Request for the mic. Yes, Mulia, how are you doing? Okay. Looks okay, Mulia. How are you doing? Can you hear me?
I can hear you.
Okay, fantastic. How are you doing?
I'm okay. I'm okay. I'm glad to be on the space, and
Yes.
I have some questions. So
Yes, please go ahead.
been I've been onto this market for about 2 years now, trading, but
Yes,
I need to find a strategy that
yes,
at least 90%, at least 90%. All the strategies I've tried, like backtesting and everything, they don't bring
yes.
what I'm looking for.
Okay.
Because I've been watching a lot of YouTube videos, learning the strategies. There's some strategy I've been backtesting. It's called the Quasimodo strategy, but
Mm,
it's kind of not okay, and I don't believe on relying on indicators because sometimes these indicators can mislead.
yes,
So if you have any strategy that for you that you feel is can provide a 90% win rate, uh, it would
yes.
be helpful if you shared your strategy with us, and
Okay.
I'll try back testing it, and maybe since this is learning like forex trading, simplifying it for the beginners, would you recommend uh, analyzing on a phone, or you have to start with a laptop? Which one would be better for analysis?
Okay, fantastic. Okay, so first I'm gonna start with um the question you've asked about the strategy. I'll tell you, my brother, believe me, you never gonna apply someone's strategy perfectly until you find your own that builds your confidence for you to execute in this market. And also, I want to tell you that indicators are very, very good, but too good to give you that execution accuracy that you're looking for. So, this is what happens. This is the strategy that I would want to give you. I want you to have your goal and lay it down in terms of what do you want to achieve. Okay? Level number one, know what you want to achieve. Okay? This could be in terms of how much money you want to make per week, how much money you want to make per month, how much money you want to make at the end of the year. The moment you know that figure, put it on paper. Okay? So take for example, say you want to make 1K dollars in 1 month, and you know in 1 month you have 20 days of trading. What is required of you to make sure that you attain that result of 1K in a month out of 20 days of trading? How many trades do you want to place per day? So if it's 1K, you're going to divide 1K by 20. And I'm sure if you divide 1K by 20, you're going to get 50. So you know that every single day you should be able to build, um, you know, trades that bring you a profit of $50. Now, as soon as you know that you need $50 per day in trading in a month, then that should inform you how many dollars you're willing to lose so that you get $50 per day. So that informs you directly on what risk reward ratio you're going to be using. And let me tell you, when people talk about a strategy, you see, sometimes people talk about a strategy and all we know is what indicators are going to show me my winning rate. A strategy is composed of so many things, guys. It's just not one statement saying I'm going to use the average, or I'm going to use Fibonacci, or I'm going to use, trend analysis, and that's my strategy. Or for me, my strategy is to trade the 5 minutes time frame. A strategy is composed of so many things. So, number one, understand your goal. Your ultimate goal will actually inform your strategy. Mulia, does that make sense?
Yeah.
Yeah. So now, take for example. Take for example, if you know that you're supposed to be making $50, um, if you're supposed to be making $50 per day in order for you to achieve 1K at the end of the month, there are days where you think you can actually be able to position to two trades, or there are days you think you can be able to position one trade. So we're saying if you get $50 per day in profit and you want to make 1K at the end of the month, that's all you need. So it comes back to the patience, the discipline, the control of the urge and the excitement, because you don't want to go into the market and it seems too good and you want to stay because you now want to shift your goalpost from $50 to $200. If you get that urge, you are actually setting up yourself in the firing line. Okay, you need as much as possible to stay hooked to your strategy and your plan. Okay, so that is level number one. Level number two, like I've said, guys, don't you ever think Yoga Money's strategy is going to work for you. Like I said, the decision making process that Yoga Money uses, you don't know if Yoga Man actually reads news on Bloomberg or Reuters or the economic, paper or something like that. Yugamani's strategy is never going to be favorable for you. But Yugamani's strategy can actually help you to form your own that somehow, somewhere picks the good things from what Yugaman is using. And I'll tell you guys, there are guys that trade that market without any indicators. All they depend on are the fundamentals, news, macroeconomics, interest rates, employment rates, and that's all. There are people who don't even ever read news. All they depend on is technical analysis. They look for the resistance and support, and that's what they trade. So you don't want to be there thinking that you're going to trade what somebody else is trading. You want to get to that level where you form your own strategy and make sure that you understand and it boosts your confidence. Okay, so that is done. So analysis. Okay, so Mulia, I think you joined maybe a little bit late. One of the real things that I've been emphasizing is the fact that you should never position a trade if you have not done your analysis on a computer. And I'll repeat it. You never position a trade if you have not done analysis on a computer or a desktop or a laptop. And here's the reason why. The phone you have does not give you enough room to even be able to draw the trend lines or whatever it is, or to even show you the past data of the market. Now, if you use your emotions to think that, hey, let me look at the 1 hour time frame on a phone, that interface does not give you ample space for you to build the confidence to go and position trades. So please desist. It's a trap. It's a trap. I see so many brokers in their ads on YouTube and everywhere. They try to show people that, hey, you don't need a computer, you don't need a laptop. But of course, that's what they have to do because they are out there to make money. And most times, even people don't love like things what I'm doing. I know people that charge $150 for people to learn the things that we're learning today. I know people that charge $100, for 1 day for people to go and pick lessons like what we're having. So not everybody is gonna give you the right information for you to make the right decision. But like, some of us have had an opportunity to learn from people who are willing to teach us. And that's where maybe it has helped us to gain that confidence mentally. And also to know that sometimes if you're in the market there, the more you learn, the better you become. So by teaching others, you actually become 2 times better. You keep reminding yourself of the things that you already know, the things you should be able to stick to. So analysis, please never do it on the phone. In fact, doing it on the phone is not analysis. The phone can be used to position trades. Once you've done your analysis on the computer, you can enter your trades, you can enter your pending orders on your phone and just wait to monitor. So the phone can be used to enter trades, but also it can be used to exit trades. Okay. So if, for example, you set your trade on a computer and you're moving, you're in transit, you can be able to check your phone and see how your trade is doing. If you find that the trade is going against you and you're really sure in your decision making that this trade is not going to do you good, like I said, you're always much better off learning what is making you get a loss. And if you think you can be able to control and mitigate it, please go ahead and mitigate the loss. You want to take a smaller loss than waiting when it is big. You're better off keeping a dollar today and you don't trade when the market is not favorable for you, and use that dollar tomorrow when the market is moving your direction. So Mulia, I hope that answers you, if it makes sense.
Yeah, I've understood.
Okay, cool. Fantastic. I think actually 2 years, 2 years is a very, very good time, but I would encourage you to spend more time on doing analysis now, and make sure that, because the more you do analysis, the better for you to build your own strategy.
I'm going to give it a try. As you have said,
Fantastic. Yeah.
I pick something from other people's strategies, I make my strategy.
Yeah, and also please avoid the situation where you start to use people's strategy and you taking their signals. Okay, so one of the disadvantages of using other people's strategies is you take signals from people and you don't know even the right style of execution and the time frames.
I think I used to take signals, but I have my own testimony about signals. So those ones, I'm sure I can't do them again.
Yes. Okay, fantastic. And thank you a lot for sharing with us. So guys, if you have any other questions, please go ahead. Go ahead. We're here to share. This is a free space. If you're just starting out, guys, don't fear. Like I said, there is what they call a demo account. So you don't have to fear that you have not opened a trade with a real account, so you shouldn't ask a question. Or if you have something that maybe you really want to share with the rest of the team that is listening in, please go ahead, request for the mic, and have something to say just before we conclude this conversation. Okay, so it looks like maybe I have said things that are clear and people understood them, or I have said things that are not clear and people did not understand the thing. So yeah, but like I said before I log off, guys, just give me an emoji. Look down on your screen. There is that heart emoji. Click it. Just tell me how you feel. Tell me how you feel about this whole conversation. Just click that emoji and how. Yes, Mulia.
I wanted to ask another thing. Trading currencies and trading indices, which one do you feel like okay? Because for example, when it comes to indices, I look at volatility. You get,
Yes.
and indices are very volatile than
Yes.
the currency. So which one would you? Because I found some challenges with the indices whereby most of the brokers don't provide the indices. For example, even Deriv trader broker had it, but right now when I check, I can only access it from Templar FX. So
Okay, so this is what happens. I wouldn't say currencies or indices or anything. All assets are actually good, but you should know the factors that affect and the market for indices. You should be very, very aware that most of the indices that you see out there are affected by, fundamental factors. I hope you know that. And as a result, the volatility is actually also based on the macro, which is the economic news, economic happenings within the environments where the companies and everything that is part of that indices where they operate from. So the volatility is usually way, 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 way higher. Now, currencies usually have a bit of controls, because we know these are currencies, these are pairs that are controlled by banks, and most of the participating individuals or institutions are actually within still that same industry. So there is a bit of control. That's why if you look at the currencies, you're not going to have that too much volatility. It can be there, and usually it happens in moments where there is news, but the market always gets back to be corrected and it goes back to the normal way of trading. So if you, I would encourage you, by the way, if you don't yet have enough confidence and enough strategies to help you trade indices very well, I would encourage you to first stick to currencies, because you will avoid blowing your money and you also avoid making losses. Because when it comes to indices, the volatility is too high, but also at the same time, whenever the volatility is too high, you're likely to lose more money if you get it wrong. So at the end of the day, I would just encourage you to do what you feel gives you a lot of confidence, but also to do what your strategy is mostly giving you as the alternative to trade. But if you don't have enough capital, if you don't have enough risk management within yourself already, um, indices, first put it aside and build enough capital so that you can be able to participate in it with a very good strategy. So maybe I would encourage you to stick to currencies as you build more strategies that can boost your confidence in trading indices. And the same thing also happens for cryptocurrencies for beginners. The volatility in cryptocurrencies is equally almost the same with the indices. So you want to avoid cryptocurrencies, because if you don't have a good strategy on how to go about it, you still want to remain hooked to the currencies until you are in a better position to execute trades in crypto.
Okay, I get it. Thank you so much.
All right. Thank you guys for listening. Thank you guys for taking off your time. It's a busy Saturday, party day, or party time, family day. People are attending parties and everywhere. But thanks a lot for taking off your time to be here. I'll catch you guys again on the next conversation, which maybe I'll post about. But one thing I have to encourage you is, guys, do not take the decision to start learning Forex markets for granted. It's really, really a huge opportunity. The more you learn, the better you become. The more patience you acquire, the better you become in this game. So I'll catch you guys again. Have a fantastic, fantastic weekend. We will talk again maybe very, very soon. But I wish you a fantastic weekend and a nice week ahead. Good night.